So the Canadian dollar has been tanking to the lowest level that we have not seen in the last 4 years. Okay, it is about to break the 70 cents mark, almost there. Okay, and if you are a regular follower of my channel, you know that I have been telling you guys that how the Canadian dollar is going to go down because of the interest rate differential. And I told you that as soon as the Bank of Canada start cutting rates and as we diverge from the US Federal Reserve rate policy, we will see a lot of pressure on Canadian dollar. And this is exactly what we are seeing. A lot of big pundits, mainstream economists were saying, oh, we don't have any proof that, a big differential will drive the Canadian dollar downwards. Here we are, 70 cents against USD. Okay. And the likelihood of getting this reversed in the short time frame is very low. Okay, some are predicting that this will even go beyond 70 cents mark. Okay, why? Let's talk about that. Well, even though I have been telling you guys that the interest rate differential has been one of the major factors driving this downward moment, the other factors are also in the play. Number one, US dollar is getting stronger at a global level. So DXY is the index where we used to measure the dollar performance against the major currencies in the world. By the way, Canadian dollar is not one of those major currencies. Okay, so there are, I think, 5 major currencies in the world that we measure US dollar's performance against. And for the past month or so, I think since September, we're seeing a major upward movement in the US dollar on DXY from almost 100 to all the way to 106. So 6% increase in the matter of, let's say, 2 months. Okay, so that price appreciation within the US dollar at the global level is putting a downward pressure on Canadian dollar. Okay, so interest rate differential is definitely one reason, but also the USD getting stronger is another reason. And why it's happening? Because so all these things that Trump has been announcing about the tariff is going to put a lot of pressure on the other countries who are exporting stuff into US dollar, mainly China, okay, but as well as India and other countries as well. So that means the trade will be disrupted, okay, which means there will be more dollars needed for those companies to pay off extra payment that is coming their way through those tariffs. So when the US dollar gets expensive, it creates a lot of problems for the global economy, okay? Because a lot of countries who have debt denominated in US dollar, the debt becomes expensive, which means they need more dollar to pay off that interest that they are incurring on that US dollar denominated debt. So they need more dollars to pay off the interest rate. They need more dollars to pay for tariff that Trump is going to impose. And this creates a doom loop where the countries need more dollar, which creates extra demand in the global economy, which makes US dollar more expensive. And as dollar becomes more expensive, the debt that they have becomes expensive as well. Okay, so it becomes a doom loop. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. What's happening with Canada? So of course, all of these things are putting a lot of pressure on Canadian dollar. because the US dollar getting expensive. But the most important thing is the Canadian economy. Canadian economy is literally in the gutters, guys. And you would tell me, oh, this is all Trudeau's fault. This is all Tiff Macklем's fault because they actually pushed the economy into the gutters. Well, they have some credit, but this lack of productivity in Canada has been going on for the last 4 decades. 4 decades. According to Bank of Canada, Canada's decline in productivity has been going on since last 4 decades when we compare this against G7 countries. And we are only above Italy when it comes to comparing the decline of productivity. Okay, so it's not Trudeau's fault alone. It's a generic problem that we have in Canada for the past 4 decades. Why? There are so many different reasons. I cannot capture this in this video, but the problem is Canada is not competitive for the international capital to be deployed. Ask yourself why a country's currency goes cheaper. That means the demand for Canadian dollar is not there. Why? Because the capital is not coming into your country. You as a nation is not competitive compared to other countries that the investors are willing to do business with. If the foreign investors are looking at Canada as a less competitive place to get a business started, hire talent, and then get more revenue in terms of ROI, they won't make any decisions about moving capital into the country. Okay? That's, I think, one of the major problems that we have in Canada. We're not seeing foreign capital flowing into country because of higher taxes, less competitive environment, low productivity. Who's going to deploy the capital when you see the return is not there compared to other countries, Mexico, US, okay, other European countries, South Asian countries, in other Asian countries where they see a much competitive policies, lower taxes, a pool of talent. I'm not discounting the pool of talent in Canada. Canada has a lot of talent as well, but you're missing major supported environment that gives those businesses a boost to bring more capital and build businesses. And that drives the productivity. Government doesn't drive productivity. Private sector drives productivity. And what we are seeing so far, the government is getting bigger and bigger and bigger. They are pretty much in every sort of business, and that is another source of killing productivity, killing competitiveness, monopoly. All of these things are against productivity growth. There is no quick solution, guys, here, okay? What should we do? As a Canadian, I will keep my savings in USD, period. I will only keep funds in Canadian dollar, which I need in the next 6 months to cover up my expenses. Anything else, I will keep in US dollar and not thinking about converting back into Canadian dollar unless I definitely need it. That's the reality, guys. You gotta protect yourself, okay? Don't expect government to protect you. You gotta protect yourself. Make sure your finances are in good order. Invest wisely and take actions in your hand for your own financial growth. If you like this video, give me a thumbs up, subscribe, check out the links in the description below. And I also send out a weekly newsletter to cover all these topics in detail in very, very simple English. If you want to read, take a look at it, subscribe, and I'll see you in my next video.